have these ads coming up, and you may have these sort of ads coming up in YouTube for places like IG Markets, Plus 500s, CMC Markets, and anything else that involves CFD trading. I have probably half of all the YouTube ads I see are based around CFD trading. Because that's the latest fad, you know, you want to make money, you reckon you're a smart cookie, you can make a killing out of CFDs. They're right, you can make a killing. Maybe. There's a massive, massive chance you can literally lose the value of your house on it. These were things they had over in the States, and, you know, people were getting stuck into all this stuff before the GFC and all that. And they've now been banned in America and a number of other countries actually, but not Australia. And I think they're still perfectly legal in England as well. They're basically, CFD stands for Contract for Difference. It all sounds very great. What it basically is, as the Australian Securities and Investment Commission, one of their head knobs basically said, it's like borrowing money to go gambling. That's pretty much what it's like. How it works is this. You can trade or bet. I think they might be a form of derivative, but you can trade or basically bet on the price of gold to go up or down, the price of oil to go up or down, silver, this commodity, that commodity, a whole basket of commodities, the FTSE, the flipping NASDAQ, the Dow Jones, the ASX 200, whatever. You can bet on all these different ones going up or down. Now, think about this. If you had $5,000 to put into CFDs, that'd just be, you know, and you made like 10%, what would you make? You know, this is all short-term stuff, these CFDs. If you made 10% on that share, on that, rather that CFD, you know, that the market went up 10%, you made your 10%, on $5,000 would be $500. Oh, whoopee-doo. You know, you made not even a week's wage for us Australians. Now, what happens if you borrowed a whole shitload of money for it? Say if you borrowed $95,000 and you put in $100,000 instead of just putting in your initial $5,000. These CFD trading houses will allow you to do that. You can put in $5,000. Hell, you can even put $5,000 off your credit card in as your deposit, so to speak, as your initial input. And they will allow you to borrow another 95%. I mean, honestly, it's like you get $100,000 worth of shares that you're going to trade for, you know, or $100,000 of this contract for difference that you got. That goes up 10%. You made $10,000. Not 500, $10,000. Sounds fantastic, doesn't it? And all you've done is borrow $95,000 for, you know, 3 days, a week, week and a half, 3 weeks, and then you've paid that interest on 2 or 3 weeks of $95,000. Of course, when the trade goes through, they get their $95,000 back, they get their interest, and I bet you the interest is astronomical. And whatever's left, bang, that goes in your pocket. So you end up with your $5,000 back minus the 95% or the $95,000 that you borrowed, minus their interest, minus any of their other fees, and you get your $5,000 back and whatever's left. Fantastic idea, isn't it? But here's the kicker. There's always a kicker. First of all, you're just little Joe Blow at home. You're trading against people who are qualified mathematicians, who have computers looking through years, 20, 30 years of data. They got all the mathematical calculations coming up on the computer. They can just hit a button and work out all the charts, all the possibilities, look at the previous market booms and you're trading against those people. They've got offices the world over. There's not just one of them either. There's a whole bunch of them. They can ask each other's advice and make an opinionated guess on, okay, we're going to do these CFDs. And you're just you back at home. These people are smart cookies. They know what they're doing. You're trading against Barclays. You're trading against HSBC. You're trading against major world banks, Citigroup, Bank of America, all that. You're trading against them. Maybe not Bank of America because it's banned in the States, but you're trading against the big boys. Here's the real kicker though with all these CFDs. If it goes up, you make money. If it drops 10% or drops quite a lot, you're left holding the can on everything. First you lose your $5,000 and then you owe them a bill of $95,000. Fantastic, isn't it? There are stories of people who have lost, and I've read about these too. Not fairy stories, these have turned up. Barefoot Investor has turned up in the newspaper. His column in the newspaper because, you know, as I said, they get much media coverage. One guy there lost $250,000 in one day. Yeah, and he had to pony up the money. All the majors come and flame and take your house. Don't get sort of into all this stuff thinking you're going to make a killing and you're going to screw a whole bunch of qualified mathematicians in a London bank. It ain't going to happen. First of all, it's all geared to be good when it's good, but if it's bad, it's absolutely gut-wrenchingly bad. There's a bloke who the Barefoot Investor has talked about as well, and Scott Pape, I've mentioned him once before. I think he's the barefootinvestor.com.au, but he also turns up in the Herald Sun, and he tells a story of two guys who were in their 40s. One was a salesman, the other one was a tradesperson or something like that. And they wanted to make a bit of money on the side. So they went in and they heard all this waffle and stuff, and they took the bait and basically got onto all this, and they were. It's a bit like consumerism. They flash this thing in front of them of you're going to be like Gordon Gekko. You're going to be sitting around the pool trading shares while sitting around the pool at your holiday home on the Gold Coast. Not really. One bloke betted that the market was going to go down right around the time that Saddam Hussein was captured, and the market went right up the day that happened, and he lost out. And like some gambling addict, like some person with real issues, he said, the day I got out was the happiest day because I knew I wasn't going to lose any more. He lost $140,000. His mate, on the other hand, lost a bit, but he thought, no, I can recoup my losses. And he encouraged his friends and his family and his uncle and this and that and whoever else. Oh, look, I can get you all this stuff sorted. We're going to, do you want to put in $5 or $10,000? He was getting a bit deep, but he thought, oh no, I'm going to come out of it. So he started investing his mate's money, and his relatives and his mum and dad's and his aunties and his... By the time it was all over with him, he had lost $350,000, and then it really was all over because the guy committed suicide over it. Funnily enough, it's been banned in other countries, but it's still legal here. And well, you know, some financial ombudsman has decided that people who get in this should have to be able to prove that they understand what the hell they're getting into. Maybe set a little written test or something like that that says, you know, do you realise that the risks you're facing here? And, you know, long story short, you are literally got the chance to lose money that's not yours. And this isn't some, oh, well, it's like, what do they call it again, the moral hazard. You ain't some Wall Street banker who can lose a whole shitload of your investors' money and walk away without being affected by it. This is stuff that they will come after your ass. They will probably grab your house off you, you know, and you'll be kicked out on the friggin' street, you know. And so I just wanted to warn you all about that, because they keep pushing this crap over and over with all the ads I look at, and there's a chance that you may be seeing a few of these ads too. They've got some fantastic lemon advertising and crap for these things. They spend the most of any financial institution on advertising these CFD trading houses. And they need to, because there's so many people that get burnt that they've got to keep all the, you know, keep finding more people to flaming join, you know, and keep any financial magazines fearful that they may lose advertising revenue if there's any of the real stories, like I've just told you, come out. So yeah, I just sort of give you that warning there, because you know, it's not what it's cracked up to be.